Alright, so I'm going to be teaching you guys how to identify a trend in the market today using market structure, also known as price action. We're not going to be using any indicators at all, only the candlesticks. No candlestick patterns, nothing. We're going to look at the chart for the chart. Price is going to tell us where it wants to go. So instead of using candlesticks right now, I'm going to be using the path um, to show you guys how market moves in an uptrend and then a downtrend. So in an uptrend, market makes a high and then makes a higher low and then a higher low and then a high. So what a high, this would be a high. So we have a high here. Um, this is a high. Then we have another high here. Then what comes every time price makes a high, it's always gonna make a pullback. So when it makes a pullback, it's considered a higher low. So when price is in an uptrend, it shouldn't be breaking higher lows. In some instances, it can, but this is the more simple stuff, so we're not going to get into that right now. So the way we see price is there's a high, so we mark off the high, right? So we're trading basically break and retest. We wait for the break of this high, which is right here, the new high, and then a retest of this zone. And once it comes back above this high, we enter here. So this would be our position. Our position would be stop losses would be around the higher low, and then our take profit would be right there to the high. So we have the indication, correction, and then the continuation phase. That's what basically the person I learned from calls it, and basic simple price action, nothing crazy. People overcomplicate trading. It's not that complicated. You don't have to use any indicators. You have to use anything. So now let me show you an example for a downtrend. So for a downtrend, it's the same exact thing but inverted. So for a downtrend, we have a low, a lower high, a lower low, a lower high, and then a lower low. So this will be lower high, another lower high, and then these would be a lower low, a lower low, and a lower low. So it's the same thing as a uptrend. We mark off a low and a high. So what we do, we mark out this high. This high cannot be broken in order to remain bearish. In order to remain in a downtrend, this high has to be respected. So we see this low and high. So in between these zones right here would be considered an area where we don't trade at. We just sit on our hands and wait for price to do its thing. Cause we could either, if we were to, let's say, sell right here, that would be guessing. We wouldn't know because price could just shoot up. Price can just do this, make a higher low, and then continue up. So we always wait till it comes back to our zone, which is the lower low. So we have the break. This is the first breakout. We don't trade the first breakout. We always trade the second breakout. So the first breakout happens. All these sellers are getting in the market. They're like, oh, it's a breakout. And then the market takes all of those sellers out, liquidates them, and then this is where we get our entry. Because markets already made it clear that it has a weakness by breaking a lower low. So all we have to do is sit on our hands and wait for it to retest. Because if you think about it, imagine all these buyers over here getting in on the breakout. What's price going to do is, of course, going to fake them out and take them all out because they don't know what they're aiming for. There's no clear sign. They're just trading the breakout. So we wait for the retest and then get in on the retest because we actually have a take profit from which is the high or the low. Those are our take profit and take profit levels. So it's simple. Now I'm gonna show you guys how to look at it on candles. So I'm here on we're gonna look at EJ. This is a trade I caught yesterday. So perfect example. So we're going here on the 2 hour. So we have let's just let me reset this. So we have market was on a bearish downtrend. But so we have markets EJ was on a bearish trend. It broke this low and it retested again. So our entry would be right here. Correct. So this would be our position on sells. Right here. That would be our position if we were to enter this trade. Because it broke the low, made a lower high, respected this lower high, and continued down. But price failed to make a new low. It made a new low but kind of curved out. So now if we go to recent price action, if we hop on the 1 hour, price broke this lower high right here. If we drag this out right here, it broke that high. It made a new high. This high. Let me get this in green. So it broke this high. And what did price do? The breakout traders saw it broke a high. They all saw that it went up, made a new high, and they all got stopped out because they traded the first breakout. So now this is a new low in the market. This low right here is the new low. So this is a low that we don't want to be broken if we want to remain bullish. Alright. So we see price retest, perfect. Our entry will come right here when it comes back above this high. Our entry would be right here. Stop loss is under the higher low. And we'll be taking, our take profit will be right here. Usually I try to go for a 2-to-1 risk to reward, so I'll probably have tighter stop losses. But this will be one trade. So what does price do? Price makes a new high after retesting. So this will be the new high. And price makes a new low, a higher low. So this low right here is higher than this low. So this is a higher low and this is a lower low. We don't want any of these lows to be broken in order to remain bullish. As long as these lows are respected, we know that it's safer to buy than to sell. So we have a new high in the market. This is two indications that there's no reason to be selling. Market is clearly bullish. We have one high, two highs, and then we have a lower high from this low, and then a higher low and then a higher low. There's no reason why you should be selling in this market. So then price comes and retests again because it takes out every time it makes a new high, price is always going to retrace. It never fails. So what do? We wait. We get in, take our profit, get out. Then we wait. It makes a higher low as expected, right? It comes back above this zone again. This zone right here, the high it broke over here, it comes back above that zone. So what do we know? Price is bullish. Bullish momentum. When it's in session, price is bullish above this zone right here. So we know that it's safe to buy. So what we do, this would be the position I would have taken. It would be stops under here. And then price, I would be aiming for this high right here. This high. Because we don't know where price wants to go. We know it's bullish, but we don't know if price wants to make a double top or wants to continue up and then down. So we play it safe, but we can leave runners as a his TP. So that would be our second position. And we already had 2 trades. So what does price do? It makes a new high, correct? It makes a new high, and then it consolidates for a little bit. So, and then price comes back into this zone. Into this zone, it corrects. It takes out all those buyers. Because think about it. All these buyers are trading the breakout. This is still considered a breakout. So price has to balance itself out. Take all those buyout traders, and then come down here. So this would be the new level that we do not want to be broken, the higher low. So we have a higher low here. Higher low. So these 3 levels have to be respected to remain bullish. And then we mark out our high as a zone. And we know above this line, price is bullish. This line, price is bullish. We know price is bullish above this line. So we know once price comes above this line in session when there's volume, always trade in session. There has to be volume. Whenever the price comes back above this, we already know stops go here and take profit goes here. Price repeats itself every time. It's literally the same thing each and every time. All my setups look the same. We have clear bullish tendencies. And now what price do? Price made a new high in the market. And this is a trade I caught today. Price made a new high in the market. So what do? We wait for a retest either of the previous resistance or a retest into this zone. As soon as it comes back into this, it could do this and then continue up. As soon as I see it come above this in session, I'm trading. I'm getting in the trade. I have no doubts in it. And another thing I could use as confluence, if we go to the JPY index, right? Many people were getting faked out on the JPY index, right? Because they saw this high right here. They saw a high right here. So they marked out this high and they see it's bullish. And price is also bullish above this zone. So what price did last night, price was coming above this zone and people were thinking it's going to buy up to this high, which was not the case. Because if we look at the daily, on the daily, markets are clearly bullish on the daily. Because all price did, this was a low created. This right here is the lower high that we do not want to be broken. Lower high, and this is the lower low. So price respects this lower high right here. It respects it. All price does is make a new low, right? And then makes another lower high. So all price was doing was balancing itself out. Because price cannot just continue down and just dump. It has to balance itself out, and it has to grab liquidity. It has to grab more money. Think about it. It's taking out all those buyers. All those buyers that just bought that correction, and then it dumps. It's just all this is just getting money to continue down lower. Because price is clearly bullish. It broke a low, made a lower high, continued down. Many people were getting faked out because they thought it was bullish on the 1 hour. On the 4 hour. The 4 hour looks bullish, but it's not the case. Price was just correcting. Price was balancing out. So this is another trade I took today. This is clear market structure on natural gas. So if you go on, I usually trade between the 1 to the 4 hour. I usually look at daily for all my confluences. I go from daily to the 4 hour to the 2 hour to the 1 hour. Sometimes I get entries off to 30 minutes. So we have these 2 lows right here, right? On the on natural gas. We have two lows. Price makes a lower high, which is one bearish indication, and then price breaks these two lows right here. These two lows get broken. Once we know those two lows are broken, we know that price can continue down. Then we see another lower high. This is a lower high right here. So once we see that, we know that price is bearish because it respects this lower high right here. It respected it. So what we do now, we wait. This is a breakout. We wait for the retest. Perfect retest. And then we know once it comes back into the zone where it's previously made the indication, stops right here, take profit. Price is always going to repeat itself. All these setups look the exact same. So we wait, price breaks this low and dumps. And what does price do every time it makes a new low or high? It always has to correct itself. So what we do, we wait for that correction, which is perfect. We got the retest right here, right? Once we see the retest, we know under this zone right here, once it's under this zone, it's bearish. We know that we could just hop in sells, and it's exactly what I did here. This would have been a position if I would have saw it earlier, but this is exactly how I would have set it up. A 3 to 2, a 3 to 1. Perfect lower high. This is just clear market structure. Trading is not difficult. People make it difficult. You don't need indicators. You don't need none of that. Simple stuff. I'm not using any indicators. All I'm using is higher lows, lower highs, and higher highs. That's all I'm using. I'm just using the price action, market structure. No reason to make this stuff difficult. So, I got one more example. IDJPY. It's another trade I caught the other day. So if we hop on the 1 hour, well, first of all, if we hop on the 4 hour, price is moving sideways. It made a new low. So this is where people would get faked out at. So we have a new low, right? So this would be the low. This low right here was broken, and this is the new low, right? And these are the lower highs. Well, this would be the levels we do not want broken, right? Because, well, mainly this level, correct. But this is on the 4 hour. And remember, if we look at the JPY index on the 4 hour, it was also bullish. But if we look at the daily, it's clearly bearish, meaning it's gonna dump. AUD JPY, meaning the base pair is AUD and the quote is Japanese yen. If the Japanese yen is going up, the base pair AUD is gonna go up pretty much. So if we look at AUD JPY on the daily, we clearly see that everybody on the 4 hours is getting faked out. It's just correcting. It made a new high, so it's correcting. So price, all it does, this is the high it previously made, and then it corrected to this low. So we don't trade in this zone. We only trade above the zone. Correct. So I saw that price was coming above the zone, and this would be the position on the daily time frame. But however, if you hop on the 2 hour, you can catch a good entry because price plays out perfectly on the 1 hour. So we know that it's bullish on the daily. That's all the confluence you need. The 4 hour is just faking people out. As long as that daily is clear and that JPY index is dumping as another confluence, there's no second guess in this trade. This trade did not stress me out. I literally went to sleep without a stop loss. This trade played out perfectly. So you have a high here. This high was broken. So what do? We don't always trade the breakout. We wait for the breakout to retest. So this is a low. This is the level of we do not want to be broken. This level right here. If that level is broken, it's considered bearish. That's it. There's no other like explanation for it. It's considered bearish if it gets broken. So we have our this is our support level, and this is our highs, right? So we know that price is bullish above this level. So what do? We let the breakout traders get all the money, whatever. They can get the money for the day. But we sit on our hands and we wait for the bigger and safer play. So price comes all the way to the support level. It grabs all this liquidity. People have their stop losses right here. All these people that got in here have their stop losses. So the price comes all the way down, grabs the liquidity. So you could put dollar signs as liquidity. This is just money sitting here. People's stop losses sitting here. So price comes down, sweeps them all out, right? And then comes above this zone. Once it's above this zone, we know that we could buy. You could put stop losses here to be safe, but me personally, I don't like having that wide of a stop loss, so I usually do like 20 points. And then, boom, this will be my position. So, it's the same thing every single time. Break, retest, continuation. Literally the same thing. Price action, market structure, trading's not that complicated. No indicators, anything. I'm gonna keep making more videos on this, but this is the way I understand the market. I'm 17. Anybody can understand this. And just want to say thank you guys for watching, and God bless.
How they gonna say I ain't Christian, that's cap. I moving like a fiend for the racks. Came in and I went out the back.